So after almost 10 years of working as a CRNA, I discovered why traditional investment advice wasn't serving 9 to 5 professionals as much. So 9 to 5 professionals face really unique challenges, and a lot of us, we have little to no financial education. The only financial education we know is what is being taught to us, or when we get out of school, we are told to work really hard, invest all of our money in the 401k, invest in equities, invest in stock, and just leave that money there to grow and hoping that when we retire, that money is going to be available to us, able to take care of us. But I had a very, very profound experience very early on in my journey that completely challenged that notion as a safety net for a lot of 9 to 5 professionals. This was when I noticed one of my preceptors lost a significant portion of our retirement plan in 2008 from the stock market crash. And this is somebody that was getting ready to retire, that was getting ready to go into retirement in about a few years, and had to extend that time frame, had to extend the time frame that she was working so she could be able to rebuild all the money that she lost in the market just in one single day. So that was one of the things that made me start questioning all this knowledge that I've been taught to us as 9 to 5 professionals, to start seeking alternative methods of building wealth. Our jobs are one of the biggest resources that we have. As a 9 to 5 professional, your job, the income that you create, is your biggest leverage. Now, the key part here is, how do you use that income? How do you use that leverage that you have in order to be able to create massive amount of wealth? Now, you could use that income and follow the same traditional path and invest in the stock market and grow your wealth that way and expose it to more risk. Or you could start looking at what some of the other wealthy, some of the other successful investors are doing. Most investors, most of the super wealthy, don't hold 100% of their investments in stocks. Most of them have a very small portion, maybe about 30-40% of their portfolio in stocks, and the remaining 60 to 70% in other assets, especially private investment vehicles like private equity, private real estate, businesses, art, and other assets that appreciate in value over time, other assets that are tax efficient. Tax efficiency is key, and that's one of the things that I discovered, and that's the reason why I went towards the route of multifamily real estate, because multifamily real estate offers significant benefits that you're not going to get from just investing in the stock market. For example, number one is the tax benefits. As a 9 to 5 professional, you get taxed as one of the highest tax rates in the whole United States. Most of us get taxed about 30, 40, 50% for some high income earners as well. And this is hard-earned income that we work for, that we exchange our time, our life for, and we get taxed at the highest rate. But there are several other assets that you could invest in. For example, oil and gas. For us, multifamily real estate, you invest in multifamily real estate and you get depreciation losses that you could apply to other passive income. That way you get to save more of the money that you make. So it's not just about investing, it's also about investing and getting to keep most of the money that you make. Number two reason why I chose multifamily real estate is the inflation protection. These assets are solid assets that cater to a core human need and that are inflation resistant. We just went through a period where the United States had double-digit inflation. In that same period of time, multifamily real estate had double-digit appreciation, outpacing the rate of inflation. So why other assets were probably losing in value, multifamily real estate appreciated in value significantly. So as an investor, your investment is protected because your investment continues to grow during an inflationary climate. And if you know anything about the US economy, there are very, very high chances that we might run into another issue where we have inflation again. They're talking about tariffs and all the other things that are coming. So you want to be in assets that appreciate in value during inflationary climate, and then the other thing is leverage, right? For example, if you go to invest in stock, if I had $100,000 I invested in stocks, I'll have to pay $100,000 to get out to buy $100,000 worth of stocks. But with multifamily real estate, with $5 million, we could acquire a $20 million property. And we could get to benefit from the 20 million, from all the cash flow that comes from that $20 million property. We get to benefit from the appreciation that comes from the $20 million property. Our appreciation is not based on the $5 million, it's based on the $20 million. And we get to benefit from the tax benefits, because the tax benefits are not based on the amount of money that you invested, but on the total value of the asset. So you can capitalize on leverage with multifamily real estate to be able to create more benefits to yourself, to get more returns to yourself. And then in addition to that, you have control over the asset. You get to manage the assets. We own and manage our own apartment complexes. So, and with these assets, you have the ability to force appreciate the value, because you're buying a business. By being able to increase the income that this business generates, you're able to increase the value of this asset. That's one of the very powerful things about multifamily real estate, because every single increase in income means a significant increase in the value of the multifamily assets. So as an investor, you have control over the value of your assets by the way you manage it. And then the other thing that I really love about the model that we do is like the ability to build wealth as a community. A lot of the reason why a lot of us, especially busy professionals, don't invest in multifamily real estate is because we love to do things ourselves. We've been taught to walk the walk individually. Even from school, like we taught very early on, when you go to school, you focus on your work. You're not allowed to look at anybody's paper. You're not allowed to. That's considered cheating. You're not allowed to ask for help for anybody. You're supposed to figure it out on your own. And when we get out in the professional world, in the general economy, that's exactly what we want to do. We want to do things on our own. That's where I started. When I discovered real estate was a powerful investment vehicle, that's why I started. I went and bought a single family real estate investment property because that's what I could afford to do by myself, right? And that's what we've been taught. That's how we've been programmed to operate. But what we fail to understand is the wealthy, when you study the wealthy, they don't do that. They don't walk alone. They walk with others. Like some of the richest people in the world own just about 10-20% of the companies that have brought them the massive amount of wealth. The rest is owned by investors. It's owned by others. They understand the value of banding forces with other people in order to be able to create wealth. And that is what multifamily real estate, the model that we use to acquire this property, does. Now, we can go buy an apartment complex together with other CRNAs, other doctors, other colleagues that get to create massive amount of passive income from this, that get to create massive amounts of tax benefits from this. So this whole community aspect, being able to create wealth as a community, is one of the powerful things that I really enjoy about multifamily real estate. And once you understand that you have power when you work in communities, when you work together in groups, now this kind of investment makes more sense for you. So you got to look at wealth building as a community initiative, not a single person initiative. Because even when you invest in stocks, you're buying a piece of somebody else's company, so you're just one of that piece of community. It might feel like an individual activity, but you're doing exactly the same thing. Now take that and apply it to multifamily real estate, where you have direct ownership into assets and you could create massive amounts of wealth. So if you want to keep learning some of these tips, like some of these things that we've learned along the way, we created a community called the Beyond 9 to 5 Club. It's a club created directly for 9 to 5 professionals that are seeking to build wealth. So join the Beyond 9 to 5 Club. We're going to keep sharing more details like this, more ideas like this that we've learned along our journey that you could use as well for yourself to grow wealth, and so that you can learn and pass that knowledge back to other people. So come on, we welcome your ideas and look forward to you joining us there.